But it seems like that 100,000 is just that major psychological level that we're just the market is not ready for yet. It's not ready for it. So immediately when it was looking like it was getting close, we just had a immediate drop and a sharp one as well. That's why we seeing this 22%, basically 25% in the past month. Um, Very interesting. Yeah, like it's just been it's been wild, and a lot of people are saying, "Oh, we're this is the bear market." I, we can get into what this may be or what it may not be, because a lot of things have changed since. Like when people say bear market, they're thinking about the past two bear markets we've had. But I'm like, we're not really in the same conditions. We can say the market is bearish, but saying just slapping a label of like, oh, we're in a bear market, only time will be able to tell. You know what I'm saying? Bear markets normally indicate 80% corrections. And so far from the top, we've only had about 40%. So to say we're in a full on bear market going into 80%, I don't I don't know if I could just make that call right now. So yeah, that's what Bitcoin's looking like. Gonna take a look at Ethereum as well. Okay. Ethereum is down even more in the past month, down 28% in a week, 33 in a month, just bleeding out. But like, if you're an Ethereum lover, these are excellent times to get you some cheap Ethereum for sure, for sure. Ethereum was really pushing in the summertime. Like people thought it was gonna hit 5K. It might. No, I don't think it did, but it was very close. But pretty much had a 50% drop, almost 50% since then. Now all the way down to 21,000. Oh no, 2,100. Um, so yeah. Also, one thing I also like to look at, I like to look at psychological resistance levels, and it looks like when it comes to Ethereum, if we look at where it was consolidating, it was kind of consolidating around this 3,000 range, 32 in between 29 and 3,200, and since it really, I mean, it pushed up to 33, but really couldn't go any further than there and just had an immediate sell off. You know what I'm saying? So that's another psychological number for Ethereum, 3,000. Definitely a psychological number. And how it's looking to me, if Ethereum can reclaim that 3,000, then, and especially that 3,300, then we could really see a larger push back up to its all time highs and whatnot, you know? So definitely like, that's why I looking at just regular line charts, like without all the indicators and stuff, because you can just basically see like where the consolidation happened, and that tells us like when it happens again, are we going to basically consolidate around that time, or are we going to, you know, push past it or immediately reject it? So next, looking at the total crypto market cap, definitely took a big hit as well. 18% in a week, 22 in a month. So let's look at the monthly resistance. Okay, basically, in the past month, the monthly resistance, well, the support in the beginning of the month was around 3 trillion. It was hovering over that 3 trillion. We went up all the way to 3.2 in the past month, but when it dropped that past that 3 trillion, basically the market has not looked back. Like ever since we went under 3 trillion, it's been a wrap. It tried to. So basically, up here on January 8th, the 3 trillion was a support, and then on January 18th, or what's that? Like January 20th, the 3 trillion became a resistance because it was constantly trying to get over it, but it couldn't. So just that fast, within a 10-day period, support became resistance. You know what I'm saying? And over a
Or
consistent times of
resistance.
not being able to get over that 3 trillion, it just dropped off. It dropped off. And now here we are at 2.45 trillion. Uh, very low. The lowest numbers, I believe, of the year. No, not of the year. I think the lowest was. I mean, it basically is there. The last time we was at 2.39 was April 7th. And in my opinion, what we're looking at right now looks very similar to that March April sell off. It looks very very similar in my opinion. If you look at this somewhat looks like a Head and Shoulders, just a little bit, like how we have low, this low, this, or is that a Head and Shoulders? Yeah. It is a Head and Shoulders. Yeah. So we have this like low period right here from this March April, had a strong push up in May, and then going like just top basically 4 trillion was bound to top in September, October, and then drop off going into the fall time. So this definitely looks to me like a little bit of a Head and Shoulders, just a little bit. And we'll see what happens after this, you know? So, yep. Seems though. So if we look at it on the 1 year chart, this 2.4 trillion is the absolute support. Like if we break in 2.4 trillion, zooming out on the 5 year chart, then after that would be 2 trillion essentially. Like if we break in 2.4 trillion, most likely the next support is looking like 2 trillion, you know. So definitely keep your eyes peeled for this 2.4 trillion dollar level. And if we can't make 2.4 the support, then like if we start dropping 2.3, 2.25, it looks like the next target could potentially be 2 trillion, you know. So, all right, moving forward. One of my favorite altcoins, we got Aave. Y'all don't know, Aave was one of the first lending platforms. So definitely an OG in the space. But they've been getting hit pretty hard. 22% in a week. Just like everything been getting hard, except the few coins we were talking about earlier. 27% a month. So if we look at the monthly resistance, it's looking like around 180, 180, yeah, 178 is the resistance. And then kind of somewhat had a support around 160, 160, but then that support turned into resistance down here. And it couldn't really stay above 160, 150, and then tried 160 again and dumped. Dump. So now we're down to 123, which if you are a fan of Aave, it's great times to purchase. The last time Aave was this cheap was also around that April time, which was literally around $128, $125. So, you're basically getting a second chance to purchase Aave at that discount that it was at little less than a year ago. Right. And then if we look at the past 5 years, okay. Yeah, so this is definitely the last support. If it breaks under this $120 range, then the next support could definitely be looking like possibly around like 80 or something like that, around this $80 mark. But yeah, and then the absolute lowest would probably be $50. But yeah, that's how Ave's looking. All right. Um, we can look at let's look at gold. Okay. So we're gonna talk about this more later for sure, but gold has been incredibly volatile, probably the most volatile it's been in uh, at least the past 10 years. Gold has never been this volatile, having sharp sell-offs from $5,500 all the way down to 400. These are trillions of dollars of sell-offs right here. Like the gold market is so huge. So like I think from what I learned that like this time span of like 5,500 drop from 4,500 was like over $10 trillion in sell-offs, and the entire crypto market is only $2.4 trillion. That just shows the amount of money that flows in the gold markets. Pretty crazy. But as we see, it just had a meteoric run up and then eventually had to come down, so it's coming down. Found the support around 4,400 and making its way back up. And yeah, but over the past 6 months, gold's definitely been just ripping and running. Past year, same thing. So yeah, like it's kind of interesting to see what a support would be like for this because of how steep it's been going. Like when you have such a large uphill run, it's kind of difficult to find a support. But looking at this on the yearly chart, I would say 4,000 is around a support, around the $4,000 range is definitely a support. That 45, 400, 46, 44, 4,500 is as well. But like a definitely immediate strong support, well, a very strong support, I would say is probably 4K. 4K, that's what I'm looking at. All right. Uh, Looking at this Bitcoin dominance chart right here. So the Bitcoin dominance, if y'all don't know, Bitcoin dominance represents the percentage of the market that's invested in Bitcoin of the total $2.4 trillion. What percentage is in Bitcoin? So basically 59.46% is in Bitcoin, and it basically tells you more when the market is leaning more in Bitcoin's favor or when it's leaning more in the other currencies like Ethereum and Solana and the others' favor. So down just slightly in the past week. It touched 60 about a few days ago and then immediately dropped off. So in this weekly time span, it looks like 60% is a resistance for the Bitcoin dominance chart. Looking at it on the monthly, same thing, but a support on the monthly would be around 50, 59, 58.8%. Right now it's at 59.4, but definitely that low 59 area seems like a strong support. In the last 6 months, it had a high of around 60 point, almost 61% in the past 6 months, but now it's down so these aren't huge numbers, like huge, but they still are very significant, just to tell where more capital is flowing towards. But if we look early in this year, in June, we see it had a top of around 65% and is definitely significantly down since then. All right, so definitely something interesting to look at. And the support, like I said, is around 58 for the Bitcoin dominance, and resistance is around probably 65 for resistance. Now, this is a dominance chart that I really like. This is the others dominance chart, and it's been moving. It's been moving a lot, And basically, this others chart is the all the cryptocurrencies excluding the top 10. Now, these would be like your lower market cap altcoins, like Chainlink, and this does not include Ethereum. It does not include Solana. It does not include Binance, but it includes the lower ones like Chainlink or Avalanche or Arbitrum, or just some of your favorite, altcoins that you probably believe in, have like great potential, but just aren't mainstream. That will include all of them. And as y'all know, I'm sure you probably know, the altcoins have been getting hit very hard with this sell off recently. But if we look at it on the past week, the dominance chart is up. And like I said, these dominance charts don't move that, like they don't have like 20% swings that often. Like even a 5% swing is kind of a lot, And in the past week, the others chart is at up almost 5% in the past week. So this definitely tells me that in the past week, people are not like just straight up selling their altcoins. If anything, people are investing more. Even though there's a sell off of the total market cap, a lot of that more money is basically rotating into the altcoins because this 4.75% is definitely significant in a week. That definitely means something. So looking at the past month, a strong support will be around the 6.7, 6.7 area. Um, definitely another support will be 7%, but it seems like the others chart has just ripped past seven, way past 7%, and it's looking to test in the past. The next one I would say is looking to test is 7.5%. That's the next dominant level it's looking to test. And then let's look at it on the year. After 7.5%, we'd be looking at around 8%. And then yeah. So I would say keep your eyes out for 7.5% on the others chart. Then if we get over that, then 8. Because basically this others dominance chart could symbolize what people call altcoin season, which is where a lot of the altcoins that are much cheaper and much lower market cap tend to rise up exponentially. It happened multiple times before, but a lot of people anticipate it because a lot of big money and big plays can be made during altcoin season. All right. Next, we're gonna look at Chainlink, another altcoin that would be considered in the others dominance chart. As we can see, down 33% in the past month. Very significant drop. If you're a Chainlink lover, this is a great time to get some. Um, $13 looks like a support. It was riding around there, consolidating around there, pushed up to 14, and then did a large drop off and couldn't get back over 13. And since then, just been riding the wave down. This in the past month. If we look at in the past 6 months, 53%, and for the year, it had a high of $23, $25, $26. So yeah, if you're investing in Chainlink right now and you get back over 26, 20, that's a 3x right there. That's a 3x. So, something to definitely keep in mind with that. Avalanche as well. It moves very similar to Chainlink. I personally feel like they're like correlated in some kind of interesting way. Also down a lot. And let's see. Oh, let me check the chat. Because I'll just be going sometimes. Do you know about VeChain coin? I can look up VeChain coin. The we can look at that. All right, but I'm just get through the rest of these. So Avalanche, seems like it's having, as if y'all can see this, right? We're just having these strong wick downs, down in the past week, down to 950, down to 960, 950. This strong wick downs, just wicking down. It happened 4 times, kind of five, no, yeah, 4 times. And this seems like this $9.50 area is a strong support because every time it hits it, bounces back from it immediately. And okay, that might either one or two things is going to happen. Either it's going to keep wicking and consolidating around this $9.50 area and use it as a support to push forward, or that level is going to break and we could keep going down. And to be real, Avalanche has not been at $9.50 in I don't know when. Like, dang, it's been a while. It's been since September 2023 was the last time it was at even $9, basically 8.75. So yeah, this is definitely in deep support area for Avalanche. So it dang near has nowhere else to go. Like it has nowhere else to go. If we go under its basically its 2023 lows, then it's like, all right, anything happened at that point. But So you can see that as a dang, Avalanche is cooked, or you can see it as, all right, this is literally the bottom of the bottoms. Like, if you love Avalanche, this is dang near a golden opportunity to get in. You know what I'm saying? So, but definitely do your own research. Don't just get into these coins just because they're cheap. Like, actually do the research and follow the page, follow their Twitter accounts, and see what the community is talking about and everything like that. And just tap in with them, see how it resonates with you. All right. Next, looking at the Ethereum dominance chart. Now, this is the dominance of Ethereum. Now, this dominance chart has definitely been swinging a lot. 12%, that's kind of a lot, I will say, in 1 week. That's just because Ethereum has had such a large sell-off. So 12% in the past week. This 10% area is definitely looking like a support right now. Let's see if we can find a resistance. So resistance is probably around this 12% area. 12%. So up here was a support, and then it turned into a resistance. Around, yeah. So in a month, literally flipped from 12 being support to within a week after being resistance. So basically, if we can overclaim, if the Ethereum dominance can get back over 12, then we could maybe see some strong bullish action for Ethereum. But yeah, right now it's looking like that 10%, 10.5% is a strong support. Let's see what it's looking like in the past year. Yeah, yeah. Last year, I remember last year in April, Ethereum was so low. It was like ridiculous. And nobody was talking about it. Everybody thought it was done. And the dominance was 7.3. That's pretty crazy. But looks like the next support for dominance will be basically about 10%, about 10%. So I'll keep my eyes on that level for the dominance, 10% and then 12%. Moving forward, we got a few more to cover. We got XRP down 21% in the past week. Just trying to find the support. Just keep dropping and dropping and dropping. Like, yeah, it's just been dropping and dropping. Seemed like the definitely the resistance was around $2. $2 was the support, and then it flipped to resistance, and then since then it's just been dropping and dropping and dropping. And in the past year, this is the lowest XRP has been in the past year. Like if you see, like in September 2024, it just shot from 54 cent to 250, and XRP has not been this cheap since then. So it's kind of like, in a way, in a free fall. I'm not saying it's gonna go to 54 cent, but it's like there's no other. Well, actually, there is some data back here to show a potential support. So yeah, maybe around this $1.50 range. It could find some support, but in the past 3-4 years, the real max support is really like probably $1. Probably $1. Yeah. Yeah. So that's XRP. Solana marked at number 7. Definitely down a lot, 26%. Okay. Yep. So in the past week, it looked like that 116, 120 area was like a resistance. Dropped under there, hovered over 100. Looked like 100 was the support, and now we're under 100. Down to 91. So let's look at it on the past 6 months, the past year, and this is definitely the lowest it's been in. Since January. Basically, since January of 2024. That's the last time it was at around $90. So we'll see if we can hold above that. But if not, I'm not saying it's going to go to $20, but that's the next strong support. Maybe even 78. 78 looks like a bit of a strong support. you know. So, all right. Um, I'm gonna check out Cardano. Yeah. Let's see what Cardano looking like. Cardano's down. So this is basically we're just checking for support and resistance, y'all. This is just an easy way to check for support and resistance, so you can just keep in mind because now instead of you having to watch the charts every day, you can just set an alarm. Like if you notice support and resistance, set an alarm if it goes under your support or over your resistance. So yeah, just like this could really help you not watch the charts, limit your screen time, just understanding these supports and resistance and setting the setting alarms in between those levels. I think that's just a great practice that we can all do, and it doesn't require a whole bunch of technical knowledge of knowing all these indicators and stuff. Literally just being able to identify the support and resistance and setting them alarms so that you're not just on the edge of your seat, because sometimes watching these crypto charts feels like a movie. You're like, it's like a thriller, like, oh, it's up, oh, it's down, up, it's down. It's just a roller coaster. So just, yeah, not being as attached, this is a great way to remove that level of attachment. All right, so in the past month, it's looking like, yeah, around that 40 cent area was a strong support slash resistance. Broke above it a little bit. And then once that 40 cent dropped, it's just been downhill, downhill, downhill. Made another support around 35 and then downhill. Now we're down to 28 cents. And yeah, Cardano hasn't been this cheap since about 2020, 24, September 24. And that last resistance was around 33 cent. So, yep, you could potentially see that happen with Cardano. And then one more chart I'm gonna look at. This one is the Bitcoin to gold chart. And I know Zarena looks at this chart a lot, so I know she'll maybe get a little more in depth with this one. But this chart is very interesting to me because gold and Bitcoin, while they're very different, they act similarly to the fact that they protect our dollars against inflation. They're basically ways to that's one of the main points of owning gold or owning silver or owning Bitcoin, to protect our money from the rising inflation. So that's why I see them having a correlation in this way. So it's not telling me the actual percentage charts, but that's fine. So just looking at a support and a resistance in the past year, it's looking like the resistance, meaning, so what this 14 means is that it takes 14 ounces of gold to buy one Bitcoin. So at the peak, it took 36 ounces of gold to purchase one Bitcoin. So that was when Bitcoin was seriously outperforming gold. And that's around that 36 range. Okay. This is in the past year. Now, maybe a support, a yearly support around this. Well, maybe in like early June was around 30. Well, yeah, around that $30 ounce area. But since that August area, it's just been a strong drop, under, not all the way down to 14, meaning that now gold is strongly outperforming Bitcoin. And if we look on the 5-year chart, the next support looks like around 14, in between 14 and $13. That looks like the next support for when we could potentially see a reversal, because it happened right here. Well, I'm not gonna say or an uptrend, because it happened right here in September of 2023. Basically, found that support around 13, and then shot up, and then after that 13, if that's broken, the absolute bottom support could be basically around 10 ounces. So it's seeming like we're very, very close to a bottom for the Bitcoin to gold ratio. It's seeming like we're very, very close. And those are good signs, because it shows that we could seriously see I mean, good signs for Bitcoin. Maybe not as much for gold, but seeing that the tide is soon to turn, and this definitely looks like a clear head and shoulders pattern. So we could definitely see another move, a different pattern from this. And if we look at it past 10 years, yeah. So these cycles look a little similar, at least from since 2020. Had two big tops, a little bitty top right there, and then dropped. And now we're having basically three big tops as well, and then a large drop. So if we look back to the past, I would, potentially we could be repeating the same thing. So definitely very interesting to check out. All right, so let's check out. And also, if y'all have any coins you want to put in the chat to do a support and resistance for, just go ahead drop those in. Well, let's check out VeChain real quick. Let's see what VeChain is looking like. All right. Hold on. And let me know if this is all making sense to y'all as well. Y'all agree? Just keep me posted. Let me know. VeChain. I don't really know much about VeChain and what it is, but I do remember hearing about it a while ago. But it's got a decent rank, 71. That's not bad. All right. Now, looking at it from a 6 month perspective, uh, looking for a support. Well, it seems like a resistance from a 6 months perspective is around 2.5 cent. And then after that 2 cent couldn't hold, just dropped immediately and then just dropped from there. Now we're down to less than a cent, 0.008. Um, yeah. Mm-hmm. The past 5 years. Yeah, this might be I think this is literally the lowest it's been, because if you look at it from the all time, it's negative 66% from its creation, you know?
Yeah, that joint look crazy.
Yeah.
That joint look
Yeah.
crazy when you zoom out. I don't know about that.
Yeah. I mean, it might surprise us though. It could bounce back, but yeah, it's definitely much lower than when it started. Because there's literally no support that I can draw. There's no support, only resistance. That's interesting when you have only resistance, no support. That is very interesting. But the main thing that VeChain has to do is get above 1 cent. Just got to get above 1 cent, and then maybe we can see a move upwards. But until that happens, just I'm expecting it to keep going down. To be real, until that happens, I'm just gonna expect it to keep doing what it's been doing. So 1 cent, 1 cent. That's definitely the price to look at. Mm-hmm. Yep. Any other coins y'all want to talk about? Any others? Let me see. I don't see nothing in the chat. Okay. Well, while we look at that, I just want to show y'all some of these trend lines that I drew. So I like to draw trend lines on Bitcoin, one the RSI. Um, and I know it looks like a lot, but trend lines to me, they're like they're basically diagonal support and resistance. So like how I just drew support and resistance, but it was more horizontal. Trend lines are like diagonal support and resistance. So This purple trend line, if y'all can see right here, it's definitely very, very interesting to me because this drawn all the way from literally one of these tops over here from October 2024, and it's touched multiple tops have hit it. Like we got like one, two, three, four, five, six, seven, eight, nine. Yeah, literally nine touch points on this purple trend line, and right now this purple trend line is literally to the T hitting this forming a W pattern right here. And I'm just like, dang, like it's because normally when you see W patterns, it can indicate that if you see a dub, like for example, this yellow is the I think that they call it the histogram, or it's like the average of how the RSI is moving, while the purple line is the accurate level of how fat of what the RSI is. So on the daily chart for Bitcoin, the RSI is at 22.77% or 22.77, and this is an extremely low RSI. These are extremely oversold conditions. Like there have only been three times this year in 2025. Well, yeah, since 2025 where the RSI is going under 30. And so I see this as a very rare time in the market. Like these are rare times in the market. Okay. And as we see this, it to me, it looks like this RSI is forming a W pattern that's hitting directly with this purple trend line right here. And from what I've seen with W patterns, like a lot of bottoms, they don't just hit one time, they form W patterns. Like, and same with the tops, they form M patterns. So if you look right over here, that's a small W pattern. If you look right there, it's a slight W pattern. Right here, it's a W pattern. Because you know the market isn't just linear. Like, well, it is, but it's not just. Most likely, it's not just going to hit a bottom one time. It's going to do a retest of the support or a retest of the resistance. So that's essentially what you're seeing when you see these W patterns. You're seeing a retest of the support. But if you see a retest of the resistance, you're most likely seeing an M pattern. All right. So just want to show y'all that this is definitely a strong indicator that we could be seeing a push forward. Now, could we continue to go down? Sure, yeah. And literally, if we go down any further, this would be like basically history for Bitcoin in at least over a year. Um, we can keep zooming out to see. Yeah, the last time that the RSI was this low was probably like, I'm not going to keep going back, probably around that 2022, 2023 bear market range. So, yeah, these are very interesting times to be in the market for sure. And the if we looking at these moving averages, hold on a second. Looking at some of these moving averages. So this is also a trend line that I drew on the price. And at one point, I was like, okay, Bitcoin is making a move upwards from that November 18th, November 21st drop all the way up to this area was around January 26th. And then just, it was literally making like a diagonal pattern, and this boom, immediately rejected that and had a full-fledged drop from like 87 to 74. Now, essentially 87, all it took was 87,000. That was literally the level that just let the floodgates in, because as we can see, 87,000 was a very, very, very strong support. Very strong support. You see how many times the price touched 87,000? It touched it for months, you know. And this aligns with the Fibonacci because, or I like to actually refer to Ma'at levels, because Fibonacci did not come up with these numbers. So if we look at these divine levels, Ma'at levels, whatever we want to call them, this is what's called the golden pocket from 38.2% to 61.8. Like the price tried its hardest to stay within that golden pocket. But as soon as it dropped under it, it just opened the floodgates. It just opened the floodgates, you know. So when it comes to these levels, you definitely want to pay attention to the 38.2 to the 61.8 levels, because in my experience, the price tries its hardest to stay in it, but when it leaves it, either going down or going up, it leaves it for real. Like it's gone. It's like peace. See you later. You know. So to be real, if we are expecting any more strong bullish action, the immediate level to look at is getting back over that 87,000. That's really it. You know, based off the history that it had touching up here. So yeah, yeah. Do we have any extra comments? Any questions? Any other coins? Anything y'all want to tap into? No, no. Okay. All right. All right. Well, yeah, yeah. With that being said, I did have a couple more points I wanted to talk to y'all about. Um, but I do want to pass it off to Zarena because I know her technical analytics analysis is on point, fire, and she could definitely give us more insights. But I'm thinking after you go over the charts, Zarena, I want to tap in with how the flywheel works. You know, the DeFi flywheel, and just give a little bit of a rundown of how you can use it with the Solana blockchain or with any blockchains. Just basically a rundown of what a flywheel even is, you know. So if you go with that, I'm pass it off to you, and then you could, you know, give us some of your insight, because I also want you to talk about the ISM, yeah, I think that's what it's called, ISM as well. And I know you are great with breaking that. So yeah,
Yeah, I'll go ahead and go over some macro stuff, and then I'll throw you the screen back.
all right, all right,
And we can go over the flywheel.
cool, cool.
So let me bring up trading view. Oh, let me share screen. Okay, sure. Um, um so yeah, I did want to start the ISM because I was looking at that on the 6 month. It's looking sexy. I don't know what people talking about bear market. I don't know what bear market they see. You know, just because price down don't mean that's bear market. It's called especially in the metals. Let me say this, especially in the metals like gold, silver, copper, palladium, platinum. Because a lot of people miss out. Platinum is up just as much as silver this year. You don't hear a lot of people talking about it though. And copper's up next. If you don't know, copper is needed for everything. If you bought a new house, even like from 2012 and up, does your house have PVC piping or copper? That goes into pricing. When you run wires in a house, that takes copper conduit. So now houses are going to be more expensive, and not just houses. We know a lot of the copper is going to these data centers that are being built. Whether you're in VA, Atlanta, Ohio, everywhere. I even heard of another one up in like the mountains in PA and stuff. But the point is, these metals are gonna be needed. And I'll tell you guys what I've been telling you guys since probably like the summer. It's a commodity super cycle. Like this is not over. They haven't even started the money printer. So how could gold stop running if they haven't even started the money printer? You know what I'm saying? That mathematically don't even make sense. Same thing with Bitcoin. How does that mathematically even make sense? You know? Especially when you know Bitcoin was purposely dropped in 2008 when it was dropped so it could go along with the business cycle, the global business cycle, the global debt refinancing cycle, yeah, the liquidity cycle. You know what I'm saying? It was purposely put out to go along with that. So yeah, top's not in. That's all I could definitely say. I'm not a fortune teller. I will say I am a knower of things, but I'm definitely not no fortune teller. And all the signs point to this is not over. So, but don't listen to me though. I'm nobody. Not financial advice. So let's take a look at this. So this is the S&P 500, okay, priced in gold. Now we're looking at this on a 3 month, which means each candlestick is 3 months. You can see I got this thing going all the way out from way back in the 70s, right? And the reason why is because I really want you guys to see. Let me take these off really quick. And let's take volume off. Okay, I kind of just want you guys to see. I drew these purple lines. So as Kwaku was showing us, and we kind of talk about each time with technical analysis, you got, you know, trend lines, support and resistance, or supply and demand, moving averages. In terms of what's really hitting the best, it's going to be supply and demand, or support and resistance, moving averages, and then trend lines. That's just based off of, like, you know, math. So my point in saying that is I just drew levels, right? No trend lines, no nothing. I just drew levels. Like I said, this is the S&P 500 in terms of gold. And actually, let's go to just regular S&P because I really want you guys to see what is going on and what is not going on. So look at that on this 3 month. That looks crazy, right? Like this looks like something you want to be in. But when I just showed you the same thing, priced in gold, that looks like you should have been got out of that asset. Am I wrong or am I right? That says 2021, or what was it? Yeah, 2020, January 2021. No, January, excuse me, 2022, December, 2021 was the top. That's what this is saying to us, right? Can everybody kind of see that?
Yeah. Hmm.
So that's what that's telling us. Let me move this map down.
Yeah, and it's looking like it's gonna break under that, and who knows how long it'll be under that purple line when it does happen. So
Yeah. So in terms of what is this telling us, like in actual data? So S&P, the what I just showed you guys was just the S&P 500, right? And that's priced in U.S. dollars. And when you price in U.S. dollars, that thing looks amazing, right? You're like, whoa! If I had to put in 10K and let's just go back and pick an arbitrary date. If I had to put in 10K in 2016, boy, I'd be rich, right? This is what this chart says to you. But again, priced in US dollars. How much has inflation been? You know what I'm saying? They say inflation is down to 2%, but that's by their numbers. Do you know that they changed how they come up with the numbers? They changed the calculation. Y'all know what happened in 1971? Should do your history on that one. But the point is, you got to factor in inflation. And so the real inflation adjusted gains that you get, that they say 10% a year, if inflation on a good year is 5%, if they tell you it's 2% on a good year, that means it's actually 5%, right? And I'm being real considerate here because post Wuhan, post pandemic pack, the numbers is crazy. The amount of money that they printed in terms of circulating supply is insane. So basically Wuhan flu, post Wuhan flu, you looking at 5% whenever they tell you it's 2%. And I'm just keeping a buck. Even if you look at Trueflation, I don't know if you guys are familiar with Trueflation, but it came out around that time in order to accurately track the inflation price, and they have it down to about the same about what the Fed is quoting. But you know, I live in the real world, and I don't know, for whatever reason, my brain doesn't accept the fact that it said 2%. But anyway, that's a long monologue for no reason. The point I'm getting at here is you got to factor in inflation in any of the gains you're getting, whether it's in Bitcoin, whether it's in S&P 500, or you bought Nvidia stock, at $100 or whatever the crap, whatever it is, you got to factor in inflation. Okay, always remember that because they'll tell you you're doing 10%, but what is the actual inflation adjusted returns on this type of stuff? So, like I said, if you had to throw some money in down here, you would have been 100,000 millionaire, whatever. And it looks really good in dollars, really, really good. And then we go back to priced in gold, which gold is the real money. You know what I'm saying? The Constitution tells you that, not me. The Constitution, not me. You know, the Bible, whatever you into, it tells you what the real money is. The Quran, yeah, they all tell you what the real money is. So I personally like to look at things priced in gold because that tells me what it's actually worth. The reason why I say this is because you can look this up. You know, a good suit. I mean, talk about like a good tailor suit. Um, a house. We can't really do a car because it used to be like horses and buggies and stuff. But if you take kind of a loaf of bread, eggs, if you kind of take 1 to 1 from 500 years ago, 1,000 years ago, 2,000, 10,000 years ago, things have kept pace in their gold pricing in gold terms, right? They have kept pace. And so gold is my personal foundation of measurement of actual anything, wealth, if you will. I know a lot of people count their net worth. Oh, I'm worth $30 million. Well, that to me says you don't really know what's going on because you're actually counting your worth in something that is debasing, hyperinflating, and not under your control, and it can be printed at any moment. It's not backed by anything. And that's what you're determining your worth on, your net worth. It's very interesting. So, my point in showing you guys this, if you go back all the way, we at 60 or, 58, whatever. And again, we're on a 3 month. So each candlestick is 3 months. And you can see that same kind of pattern, right? It's not exact, but you have a chop here, down a little, not a test of this level again, but right above it, and then, pop out to the top of this range and kind of find its way back down. Same thing we had here. Didn't tap the bottom, but kind of went down, tapped the top, and then just shot right down. And so, like Quicker was saying, kind of looking for the ass to fall at the bottom here, so to speak. Again, this is a 3 month, so you guys can see we have 1 month and 27 days left on this candle. Let me just go to a monthly since we are on a new month. But yeah, this is just like I said, this is just kind of the range it's been in since 2008 recovery, which happened, I believe, 2013 is when kind of recovered. Yeah. So from 2013 to now, about a decade, and it's really just been ranging in from 2.7 to 1.3. And again, why this is significant to me is you keep seeing, oh, S&P 500 all time highs. Oh wow, look at these god candles. But when you look at it valued in real money, it's not doing any of that. In fact, it hasn't even broken out of this freaking post pandemic top right here. So what all time highs are we talking about? But again, I don't value things in terms of dollars like that. I know a lot of people do.
Yeah, perspective is everything. That's basically what you're saying. Like that's real.
Yeah. And we could just do the Russell just so I can show you guys this, and then I'll show you S&P in terms of silver because it's even worse. But the Russell is, so the S&P 500 is like top 500 Fortune 500 companies, and it's also the way it's aligned, or like the way they rebalance and stuff, is kind of like more heavily weighted tech and stuff. And then the Russell is 2,000 stocks, so you're getting a better picture of the actual economy, if that makes sense, right? Like you're getting a higher sampling size. So what I just kind of want to show you. What do I have drawn here? Let's go back to the 3 month. So what I just really want to show you guys is, in terms of the Russell, let me get rid of that. So it just kind of broke out of, its top from 2021 in terms of US dollars, right? This is like the actual dollar price. So in 2024, it just broke out, and then it broke out actually above candlestick close here, where we are now, in 2026. So that's just happening though, right? And then, like, if we go back to looking at the S&P 500, it just looks like it's just been a rocket ship to the moon. But you got to remember, most of that is, again, what is it heavily weighted in? Um, the what are they called? I think Mag 7 is basically carrying a lot of the market, especially if you're looking at the S&P 500. So I just want to show you guys this in terms of dollars, and then we'll go back to gold. So again, you can see we're on a 3 month. This was its 2021 high. It finally retested that in 2024. And then now here we have, finally, at the end of 2025, it actually broke out of it, um, that resistance level. Which, just what do you get from that compared to the S&P 500? You can see that all of that, stocks are all up and all the rage and everything was kind of noise. Not saying that, like, you didn't make more fiat, but in terms of real net value produced, the Russell says it wasn't a lot since 2021. Okay, so back to, this is in terms of gold. We'll just look at this really quick on the monthly. And what kind of pattern do we see here? Also, you want to talk about the ass falling out the bottom. Look at this, from 2000, the turn of the millennia. This joint has just been straight down. And then it finally hit a bounce recovery. And so what is this? So this would be 2018. And in terms of gold, it has not, the Russell has not tapped or breached or anything, even interacted with its last all-time high from 2018. Is that 2018? Yeah, 2018. Right, we can see even in 2021, it couldn't even muster up the strength. Now here we are, and this is supposed to be, you know, where are we at? Yeah, right about here. This is supposed to be like all-time high S&P 500 territory, and this thing is just straight down in terms of gold. Again, real money to me and a lot of other people. So yeah, just kind of want to show you guys, pay attention to what you're valuing your net worth in.
So
I see so many.
I wanted to
Yeah,
ask
go
you,
ahead.
right? So as we see, when you look at the chart relative to gold, it's in a downtrend, but if you look at it relative to dollars, it's in the uptrend.
It's in the uptrend.
Does that kind of
Yep.
show that eventually the representation of dollars will follow the gold as well? Like, you know what I'm saying? Like, this is kind of like the telling you what's coming, and eventually the level in dollars might also go into a go downtrend. Is that kind of what you're seeing as well? Would you say?
Um. Yeah, you could definitely say that they are juxtaposed to each other. Typically, you can even see that, not all the time, but occasionally in Bitcoin versus gold. So, yeah, obviously IMW in an uptrend, S&P 500 in an uptrend, but then when you price them in gold, they're really in downtrends. And S&P especially is at a key level. It breaks that level, and like I said, the asses fall off the bottom. Like, It's like driving in a car and there's holes in the holes in the floor. That's what the S&P 500 is gonna be looking like. So
Mm,
if you
yeah.
think it's tricky now, yeah,
You're not afraid of like politicians wanting like a weaker dollar because it helps more with, exports and all that kind of stuff. So it's like if they want a weaker dollar, then that kind of makes sense.
that
Like,
is what.
yeah.
So sorry not to cut you off, but
Oh, you
that
good.
is the Oh, give me 1 minute. It's my mom. Okay, so remind me your question one more time, Quaco.
So if the politicians like Trump are calling for a weaker dollar to help with
Oh,
more exports and all that, like this kind of is showing the trend like that if we get a weaker dollar, the S&P most likely is going to look weaker as well since that's the only thing propping it up, you know, the value of the dollar. Yeah.
yes. So let me just do a share screen real quick, and we will ask Perplexity just so. I just like to ask Perplexity so you guys always know the things that I'm saying really, you can fact check them just like I'm doing in real time. Um, I don't just say things because I like to talk. So okay, exactly what you're saying, Kwaku, is what I've been telling people. I'm not sure if Reds is on, but I'm telling her that even since um so I kind of just started comprehending the macro landscape in the way that I'm able to tell the story to you guys. It's all just really unfolded really in 2025, 2024 for me. Um from a mental space standpoint and ability to comprehend and relay something to people and then see what's going on in the news and be able to know, okay, what does this actually mean, right? Separate the noise from the signal. So part of that is the weaker dollar. So when Trump first got in, and I'm sure all of you guys remember last year, you know that's what he campaigned on. First of all, let's start there. That's what he campaigned on, and this is why, among other things, the reason why I kept telling people he was going to win the election. Because what was the other chick campaigning on? You know what I'm saying? And if you comprehend the global fiat system and the tangle webs that they weaved, you know, okay, Japan stops buying our bonds. Okay, China. Okay, these countries stop buying our bonds. Well, this is why I kept telling people that stablecoin regulation, or not even regulation, but the stablecoins were here to stay, and you couldn't stop them because they need somebody to buy their bonds. Straight up, like somebody has to be the exit liquidity. They need somebody to buy the bonds. So then you move to the weaker dollar. That has to happen in order for okay. So the world economy and the whole geopolitical situation or geoeconomic situation is changing, it's shifting, right? What was a third world country is about to become a first world country, and what was a first world country is about to become a third world country. We see this right here in America. Okay. I'm not sure, where everybody's tuning in from. You guys are still in ATL or whatever. But some states got National Guard. That feels very third world country to me, you know? So that's part of the economic shift. The other part is that the US doesn't produce anything but financialization and credit. That's always they've been producing for like my whole lifetime essentially, right? China, on the other hand, produces actual goods that people buy with actual dollars. And so the weaker dollar narrative comes in, and I'll just type this into Perplexity so you guys can see that what I'm
One
saying
thing
is accurate.
one thing I want to add about China is they refine 90% of the metals in the world.
Yeah, because who they do their deals with? They go to Africa and they get the mineral rights. They go to South America and they get the mineral rights. They go to Jamaica and they get the mineral rights. You gotta pay attention. They might not, you know what I'm saying? See, they go there and they build a toll road. Then they own the toll road, so they gain the money from there. And then they own the mineral rights, and then they pay to get the mine set up. You know what I'm saying? It'd be a lot going on. That's what they do. That's why they put the roads in there and stuff like that. When you get on the infrastructure side, it's easier to get in on the business side. But yeah, that's definitely accurate, and that's also what the Venezuela thing was about as well. A lot of people focus on the oil, but trust me, it ain't about the oil, or I should say, not only, right? What was that typing? Why is a let's just say explain the pro con of a weak dollar. Okay, so before I kind of get into what perplexity gives us, so like I was saying, the world order is changing, and this is with, if you guys know Ray Dalio of Bridgewater, uh, I think Associates or Investments or whatever, his hedge fund. He's no longer like a primary member of that or advisor, but Bridgewater Capital, that's what it is. But Ray Dalio's principles, his whole thing on the debt cycle, and every fiat currency only lasts X amount of time, and he has this whole video on YouTube. You should watch it. If you don't know what I'm talking about, Ray Dalio, type it in on YouTube, save it, write it down in your notes, tap in with it, get the book, watch it all, soak it in, just from the standpoint of comprehending the macro of what he's saying. So the weak dollar. Okay, so like I was saying, we don't export, not we, the United States doesn't export anything except credit and financialization. The financial markets are the US's equivalent of manufacturing to China, right? Nobody's investing in the Chinese stock market, everybody's investing in manufacturing. Doesn't matter if you're from Nigeria, America, China, don't matter. Everybody's going there to invest in that. What do they come here for? They come here to invest in financial assets. So the weaker dollar makes it better for us to export goods because the dollar is cheaper against foreign currency. See, we've been in a dollar bear market, and now we're going into dollar bull market, and now we're going to a dollar bear market, right? And again, the reason for that is foreign currencies. So when the dollar goes up, essentially, because the whole reserve currency thing, even though it's not completely accurate, but we won't get too much into that right now. Just the terminology, because it's really the treasuries that people are using as reserves. But back to what I was saying. The So currently right now, if I go to China and or let me do it another way. Currently right now, if I have a product in the US and I want to export it, those people have to pay me in dollars because I don't want some whatever currency. They got to pay me in dollars. So in order to bring exporting back to the country, the dollar has to be weaker so people will buy more goods. Basically, the goods are cheaper. And then on the flip side, what happens is the foreign currencies go up in price. So, a Mexican peso, a Jamaican dollar, right? These things go up. If you guys have been to, Caribbean country or Mexico or what have you lately, and you kind of know how that money goes far. Well, when it starts going up, it's going to go a little less. If you've been to Europe in the last year, you know the difference in what I'm saying because the euro has gone up against the dollar like 10, 12 points, right? So what that means is for us with dollars, when we go to a country that uses euros, we get less bang for our buck versus the people with the euros, they come here, they get more bang for their buck. So it's really all about economics. So yeah, the weaker dollar is the entire economic plan in order to pay for, or not pay down the debt, but to service the debt. Because at this point, there is no touching principal or any of that. You really can only worry about servicing the debt. So yeah, the weaker dollar is the narrative has been based. I mean, he said it when he was campaigning. He said it after that, as well as just the fact of even if Trump didn't say it, that's what has to happen. That's why again I kept telling people the other lady wasn't gonna win because nothing she was talking about matches up with where we are within the global economic setup. So yeah, we need a weaker dollar, and it's actually really good. And yes, it will make the stock market worth less. And this is why people like Ray Dalio, or Stan Druckenmiller, or whichever, Charlie Munger, whatever white boy investors, or even black, whatever you into. This is why they say increase your international or foreign exposure. And this is where crypto comes into play. This is where Bitcoin comes into play. This is where that 5% of crypto exposure comes into play because it's not a US market. And that's really another reason why I feel like you're seeing it push more because they know the US markets are going to be shit. So in order to cover their ass, because you can already see that Goldman Sachs put out that, and not just Goldman, but this was the one that I had read personally, that over the next decade, 2 decades, they expect diminished returns in U.S. markets, right? So if they say you get 10% on the S&P 500, Goldman Sachs is saying, hey, you need to be looking at more at 6%. So might be the last hurrah. And you can even kind of see that if you look at the Dixie, DXY is the ticker. But yes, let's just see what Perplexity says. Pros: eases debt burdens for foreign denominated borrowers. For entities and governments holding dollar denominated debt issued by the US, a weaker dollar. Okay, this was the other part. I forgot to say this. So, most of the debt, US dollar debt, is created outside the US. Most dollars are created outside the US. This is something people in the US really don't comprehend because you work, earn, save, spend, debt, everything in dollars. Versus other countries, it's a little bit different, especially if you're in a more tourist area or country. So there's a shit ton of US denominated debt going around, right? China owes Russia, Russia owes Germany, Germany owes you know, I don't know, Nigeria, Nigeria owes Colombia, Colombia owes the the US owes Nigeria. And you know what I'm trying to say? Like it's all one big tangle web. It's all interconnected. They all owe debt to each other. This is also why nukes, people keep talking about people that are going to nuke each other. You know what I'm saying? That's not going to happen. And I can get into spiritual reasons. Where are some of these people going to go? They don't have souls, so why would they nuke the only place that they could be? You know what I'm saying? That don't make sense. But yeah, all these countries have a bunch of dollar denominated debt. So if the dollar goes down, then they can service that debt easier. And plus, their foreign currency is going up, which means they got a surplus. Hopefully that makes sense.
Hold on. Did you get into the cons for the weaker dollar?
Oh
Oh,
yeah. Let me go to that too. Um, yeah. So the cons are pretty easy. Higher export costs. This was what everybody's talking about, the tariffs wars and tariffs this, tariff that, right? That's really what a lot of this is about. Is because they're turning this into a manufacturing place again, and that takes a long time to build up these industries again. But also at the same time, the stuff they are building up, they want to be able to export these products. But at the same time, it creates um it throws the market off balance, right? Because if you never it's kind of like you have a friend group and you have the one friend who always cooks and if you're the friend who never cooks and then you guys have a party and then all of a sudden you decide you're gonna cook 5 dishes, it kind of throws things off a little bit. Not that it's bad, but it just throws it off. um so that's really what's happening, is that it's just throwing the way things are right now. It's throwing it off. This is why everybody keeps talking about the great reset, currency reset, market reset, economic reset, is because there is a global world order change. And if you're not paying attention, you're gonna get left behind. Just like they did every other time. Every other time. You can go back in history, I can pinpoint them. Like they just keep getting left behind. So don't get left behind. But so the cons, higher import costs is kind of the main thing. Inflation risk. Um, but with the amount of debt we have, we already know we're going into hyperinflation. So I've been saying this since 2020 when I first found out about what the hell hyperinflation was. Um, Reduces purchasing power. Okay, this is the part I was talking about, right? Like if you go to Europe and you go get some euros, you're gonna get less bang for your buck, right? This is what I was talking about here. Market uncertainty, volatile. Okay, so this has to do with basically in the mean between time and us going from the financial markets as all we have to um producing more chips and cars and whatever else, manufacturing steel and um I don't know, natural gas, whatever that they got cooked up. That's what they want for markets in the US, right? That in between time is going to create a lot of volatility. But volatility can be monetized, right? Whether it's on the up or the down, it can be monetized. And so, oh, I just realized I'm not sharing my screen. Okay, you guys should be able to read along with me now. But this is what I was talking about as far as going abroad, this point, and then export. I mean, sorry, higher import costs, right? What we're bringing in. But and this is because foreign currencies are going to go up against the dollar, so it's more expensive for us to import. And then this is what I was talking about here, the market. So yeah, currency depreciation can create volatility and complicate financial planning. Yeah, so this is kind of the thing where you hear a lot of people, more so, I would say like in their 50s and 60s, worrying about the market and things of that nature because um, we're going into a dollar bear market. We're going into a time where foreign and emerging markets are going to be the boom, not already kind of established middle of the run markets. Um, so yeah, those are the cons. Pretty self-explanatory. Plus, they kind of go into exactly what I was just telling you guys as examples. Right? Short-term currency move can help exporters but hurt consumers and firms relying on imports. Over the longer term, effects depend on inflation, wage growth, and policy responses. So the main thing is that it's supposed to bring jobs back and people can have more jobs, and that helps the economy, as well as the fact that we'll be exporting goods. Um, yeah. So we'll see how it plays out. But in terms of what this administration says they're attempting to do and everything like that, you need a weaker dollar to do it. You can't have manufacturing onshore with with the Dixie at 120, 112. Needs to be down, in the 90s, 80s.
Got you. Did you want to take a look at the ISM as well. Just go over that too. It just had a nice uptick.
Am I sharing? I should be. Yeah.
Hmm. Yep, yep.
Yeah. So what I wanted to show you guys on the ISM. Yeah. So you can see that uptick,
And this is
but
basically
I
the
really wanted to
business
show.
cycle that is Bitcoin kind of is correlated with. You know how people
Yeah.
might
This
think.
is the global business cycle.
Hmm.
Below 50 is a contraction. Above 50 is expansion. And it's the global market. Okay, here it is. Because I was like, it was on the MACD. So if you guys see the MACD, I think it was actually on the 3 month. Yeah, you can see that the green is now above the purple. Wait, yeah, it's just broken out. And essentially, when that happens, market go up. And when the opposite happens, when the purple crosses the green, then markets go down. Just in a layman's terms. And you can see that literally just happened. And people are screaming about a bear market. And like, where? Where? Mind you, Bitcoin did all of that without any global liquidity. Keep that in mind. Everything we seen was a front run. Trump pump. That's my opinion. You know what I'm saying? Not financial advice. That's just my personal opinion based off of what I see in the data and what I feel.
Yeah, I've always thought that like whenever the market moves off of the opinion and the voice of one person, it's never sustainable. You can ride the waves, ride the volatility to make some money, but it's not sustainable. Like Elon Musk, same thing in 2021 with the Dogecoin and all that. Like came right back down, same thing. And it's ironic how they ended up working together. They both kind of did the same thing to the crypto market and end up working together. So, and they probably won't be the first people to do this. I mean, the last people to do this. So, just keep that in mind, y'all. If we know that the market is pushing based off basically what one person is saying, it's not sustainable. You know, but they probably do that purposely so they could make money off that volatility and just eat on both ends. So and
Yeah,
like
more
if
than
you,
likely. That's the
yeah,
game they play. If you ever watch like Billions or Industry or anything like that, that's how they play.
I do want to watch those shows definitely. So like, yeah, you can play those games with them too if you want. You got to definitely have a strong mindset, or you could just be in it for the long term. You know, so yeah,
Yep. But yeah, the important thing here is we are above 50 for the first time in a long time, which means, again, what is bear market people are talking about? Um, let's just look at Bitcoin chart as well on the 6 month. No, I think it was on the 3. Okay, here it is. Yeah, so just trying to see like if it holds this structure here. Um, I think where it closes may be more important than if it wicks down, but we'll definitely see. Obviously, MACD looks like. I mean, I've said this in the metals and in Bitcoin. It needed a breather. Um, doesn't even show up on that one. But it needed a breather. Like you can see here, purple crossed, Bitcoin down. That's kind of what I was showing you guys. Yeah, just kind of waiting to see what happens. I feel like Q2 is where the action happens, just based off of money printing and new Fed and things of that nature. Um, the other thing is the Clarity Act. I feel like they're also dampening the sentiment while they push to get that together. Yeah, because the other thing is something that Captain Rashom says is that they need a bubble somewhere, and I do agree with him on that. And I also agree on the point that I don't see it being in real estate, just where everything is and interest rates and the general sentiment of the people based on what I seen on the YouTube TikToks of people talking about rents is high and billionaires shouldn't have this and all of that. I don't really think they could do higher prices on the house market without a serious social situation. And then you have stocks. And like we just said, we're going into a weaker dollar environment, which typically means the market isn't going to do as well. Typically, you see emerging markets do well, and crypto is an emerging market. And so they will, or they're looking to have a bubble in the crypto markets so that they can get the tax receipts from that, right? So that people have gains, people have taxable events, people have taxable gains, and people pay the taxes on that, right? Because at the end of the day, the U.S. is a company, just like everything else. It's all about that balance sheet. It's all about that P&L. And nobody's going to be buying their bonds if the balance sheet and the P&L isn't looking too good. So if they can get some more tax receipts in from a bubble, that will help them knock down some debt. That will help both of those look a little better from a company standpoint. So yeah, I definitely see the next bubble being in this market. It's ripe. It's ripe for it, and it definitely fits. It's in line. And again, stock market. I don't know. I think it just needs more build out before it goes super crazy again. Just in terms of everything that needs to happen for the AI and robotics thing to go the way it needs, or to go the way they want it to go. Definitely don't think there's an AI bubble. Definitely think some AI companies are not worth buying though, and that's more of the so-called bubble than anything. I feel like that is more of a scare tactic to get people not to use AI. So yeah, just be aware of that and definitely use AI. And always remember, the only supercomputer in the world is the one in between my ears and the one in between your ears. There is no other supercomputer. The brain is a wireless transmitter and receiver. It is a supercomputer. So always remember that, especially in this AI era. Nothing beats a real supercomputer. And as far as I know, AI cannot transmit and receive. Not in the way we can. So, but yeah, I don't know how I just got on that.
You're talking about the bubbles, the AI bubble, and everything.
Yeah.
Hmm.
Trying to think, was there any other tokens I wanted to look at? Let's just do Monero real quick, and then I'll throw you back the screen.
All right.
So on the monthly, clearly it's sharp from the. Oh, it actually hit 800. That's crazy. I didn't realize that on the tick. But yeah, so from 800 down to 377. Not bad actually. Not bad. Do we look at silver? Yeah, I mean all of this stuff is just cooling off. let's look at silver gold ratio. So something I find interesting is this is, oh wait, yeah, this is the last, yeah, this is the last top here on silver. Hasn't reached there yet. It just kind of got to like the bottom of this though, which is I think this 2004, no 2006 top. Um, yeah, what I get from this is silver isn't done. Mm, this is kind of the opposite way. Nothing really to see on here. But yeah, it's kind of all I have for you guys as far as macro. The main thing is ISM is moving up past 50. We are now in what is going to be an expansion period while everybody's crying about the bear market. Actually, let's also take a look at Llama real fast. DeFi Llama. Let's do stables. All right, so we're still at 300 billion on chain. No real tick down, just a little bit of slight choppiness. No real tick down, no. USDT is still dominant, 60%. This is the Trump John, this World Liberty stablecoin. I have no involvement or interest in it, but just like to point it out. Uh,
Yeah, I heard that like he did a deal with Binance, and maybe some regards like that's how he got pardoned because like they let him
that
put
is,
their
we are
coin on.
reporting, but I'll say allegedly that is definitely
Oh,
what
allegedly.
exactly happened. That is allegedly exactly what happened.
Yeah.
He, this was a backroom deal before Trump even got in. They worked it out. They said, you know, whoop de whoop, you do this, we get you off. It's federal, we got you. You know what I'm saying? Allegedly. I don't have no insider knowledge or, you know, I don't have no dog in the fight, but that's what it looked like to me. You know, and they run the joint like a crime boss, you know? So that's what a crime boss would do.
And if I could add, World Liberty Finance also partnered with Velo, incorporating their USD1 token.
Okay. See, I didn't know that. That's good right there. That's good to know right there.
Just
Um,
add that on.
where do we have any euros on this list? Okay,
But let
so
me
we
I mean,
have,
let me say too, not to cut your wisdom or nothing, but I'm glad to see y'all meeting up
yeah.
like this. I don't know if you noticed the Bitcoin bully though. I was just tapping in real quick. I seen y'all drop the link. I'm like, then let me tag in and see what they got going on in here.
Okay, peace, peace. Yeah, thank you for joining us. We come
Thank you.
together because of you. So yeah, shout out to you.
Yes, sir. Every full moon, around the full moon is when we do our calls. So yeah, man. Thank you
Nah,
for being here.
nah, this raw, this raw, this raw. I'm a fly on the wall. I fall back.
All right, bet, bet.
Yeah. So uh, where's it? Oh yeah, I just wanted to see like where was euros on here. So the first euro comes in at 24. Um, so I still find it interesting. There isn't a huge demand for euros on chain. Everything is still USD, especially when the euro is going up against the dollar. We can just look at that on the chart real fast. Just go to forex and euro. Like if we just do from here, nothing crazy. Just 2023 to here, up 20%. If you had to just went from dollars to euros, No Bitcoin, no nothing. No Monero, no ETH, no serious volatility. Just from going from dollars to euros, you'd be up 20% right now. And mind you, the stock market is quoted in doing, you know, 10%. Again, that's not inflation adjusted. If you adjust for inflation, you're somewhere more closer probably to 7 to 6. So again, being able to do that on just going from dollars to euros, that's a pretty significant play right there. And for those of you guys who've been with us for a while, you may remember in the summer, I just wanted to show you guys kind of on the year, it was up like 15%. In the summer, I showed you guys a basically a play I was running because I knew the euro was going up against the dollar, and that was just on Coinbase. I can actually show you guys on Aave. And I actually should have just did that from DeFi Llama. That way you guys could see me use that. Always really go to DeFi Llama to find your links. If you don't already have them bookmarked, that way you're not getting any spam or scam. So let's just go to Euro. So yeah, right here you're doing 3.16. And the last I checked, the Euro bond was like two, 2 and 3/4, maybe 3%. So on chain, you seem to still be doing more than even Euro bond, which I find very significant and interesting. So the kind of the play I was just showing you guys this summer was because the euro, I expected it to go up against the dollar, and it did about 10 or 15%. Instead of, if you're in an LP and say you're in a ETH USDC LP, instead of taking all the stables in USDC, take some, put it into euros, then, you know, obviously you're earning this 3% yield. But the main thing is it's going to go up against the dollar. So if you had just kept it in USDC, you lost 10% on the year in dollar terms. And if you had swapped it to euro, you would have gained 10 to 15% in dollar terms. Hopefully that is making sense. Plus the supply yield. So probably one of the easiest and biggest plays is the euro thing. It's just so simple. If you're gonna be in stables, throw stables in euro. I will say LPing though, there really isn't any real yield. Excuse me. The main thing I've seen is on Aerodrome, the Euro C and USDC pool. Let's see. Back here. Anything significant here? No. Yeah, I just wanted to see what we had going on in stablecoins. This is kind of just this is the liquidity of our markets. So, and when I say R, I mean the DeFi markets. So I come here just to see, hey, how's the liquidity doing? So, we're down almost 2 bill in 7 weeks. I mean, in 7 days. But, that's not even a full point. So, that's pretty dang good to me. In 30 days, we're still not even down a full point. So, and again, really no real dip since, this 2024 pickup. Like you can kind of see, like it fell off and then this trough here and it just picked up and there's no real significant dip, I would say. Yeah.
It doesn't seem like stable coins like have dips like that. Just more people get in, and more, just and it's now it chills, and then more people gets in. It's not like gonna fall out the floor. Like because I guess yeah,
Yeah, that's not gonna fall at the bottom on that one. Yeah, you're
yeah,
correct. Especially, with the plethora of yields these days, you're just not gonna really see that. Cause it's not just like, you're just holding it. There's
right.
just a plethora of yields. So you can at least get a little something. You're not just holding it. And plus,
Like, why sell it? Why sell it back to your bank? Like why? You know.
yeah, exactly. As well as we're in a more I won't say we're in a mature phase, but we're in a more mature phase than previously with stable coins, right? Um,
Mhm.
and their trustworthiness and their verifiability, maybe not even trustworthiness, right? Like, my favorite stable coins, I don't trust, I verify. Um, but as far as that goes, it's a more mature market. So people feel more comfortable holding them. Whereas before you might have had some, you might have, but it would have been like 10%. You would have been really all in Bitcoin and ETH or whatever. It wouldn't have been significant. Whereas now, you see people where their whole portfolio is stable coins. Like, and I'm not saying like 10K, I'm mean like 10 mil, just stables. No Bitcoin. All they have is ETH for gas, like just stables. So they kind of have their own swag to it now. Whereas before they didn't ever, you know?
Yeah. Also, because like people looked at Tether kind of weird, because everybody was a little like iffy about it, but then other stablecoin companies started coming out, and it just made more validity to it. And it was like, all right, all right. I guess we can get with this. Because I remember people used to kind of
Yeah.
shit on Tether, back in like early days. Like, it's like, what are you doing? Like, you don't go up or down. Like, what are you doing? you know. So
Yeah.
yeah.
I definitely think it's a little different. Especially, with Tether being the first deployment being on Bitcoin and everything. And why they even came out. It makes sense when you actually think about it, like why Tether even was started. Um, but yeah, it was a lot of people not trusting it, and like, why do you want a stable value? You know? And then as well as the dollar denominated aspect of it, the kind of Bitcoiner or cypherpunkish type of mindset, we don't need dollars going to shit, you know. Um so why have you could choose any money, you choose monies to be denominated in dollars, kind of being the thought process. Um but yeah, like I said, and then you just have the advent of actual decentralized stables. And that's kind of what really changed the game. Not so much like Tether changed the game and then die. USDC didn't really change the game. Like the main thing they did was that they have the one-to-one infrastructure of on and off ramp one-to-one. But I see Tether doing a lot of good stuff and they got stuff going on. So it may, you know, change the tides a little bit on that. Um, but yeah. Oh, and then let me just point out this right here is Circle's T bill, tokenized T bill coin. Uh like if you're looking to get some T bill yield, you know,
So that,
this is one of them. I think it's like 3.5 or something, three and three quarters or something is the yield. And then this one is Ondo.
mm, okay.
Yep. Yeah, I will throw the screen back to you, Quay. I just
All
kind of
right.
wanted to show you guys a little bit of what's going on chain, and we can go over the flywheel. P Square, we can see your screen, but I can't hear you if you're talking.
Thank you. I was muted. I was muted. I appreciate that. all right. All
No
right. All
problem.
right.
I just kept seeing your
Cool.
mouse move. I'm like, what's happening?
yeah. 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 All right. So basically, all right. So I have two flywheel strategies. One is for entering in a bull market, and the other oh, is entering in for a bear market. Because basically, based on those different scenarios, I would suggest that you have two different strategies. Just being prepared for either one. So, um, like we're me and Zarena are both kind of indicating like we're not full on believers that like, oh, this is the bull bear market. Like we're in a deep, in my opinion, deep corrective phase, but very much more likely entering into a more of a bull market. So with that being said, when it comes to using a flywheel, the when you're entering in a bull market, you want to basically accumulate as much coins and as much assets as possible. And one way to do that is to utilize liquidity pools. And if you don't know what liquidity pools are, they are essentially where you are a market. I think that's the right term, a market maker, where essentially you can input capital into a pool and you can earn fees based on each time traders trade in between the two assets that you have invested into this pool. And your money is secure. You can take it out anytime you want. It's not like you can't withdraw it. You can take all of it out whenever you want. Um, so yeah, but it's basically a way how you can invest but still earn on top of your investments. Now, entering into a bull market, that's definitely one of the like your goal should be to stack up as much because you want to take them profits up at the top. All right, and so like I was saying, how this connects to a flywheel is that that's the first step. As we say, start initial capital, deposit into a liquidity pool LP, and I'm using the example Meteora. Meteora allows for Solana to USD. I'll just show y'all real quick. So Meteora has a lot of liquidity pools. Like you can on all these meme coins and all this stuff, like they got liquidity pools for that. But to be honest, I really only trust oh yeah, give me a second. I really only trust two liquidity pools. I'm not gonna say two, but I mostly value two liquidity pools on Meteora, with the first one being Solana paired with USDC, because on the Solana network you have to have Solana. It's like the gas token. And then the other one is the Meteora token paired with Solana, because this is the native token for the platform. So because to be honest, I'm not trying to invest my capital into like these pumping up meme coins, but I don't see Meteora, even though it's a much smaller market cap, I don't just see it like a pumping up. I see this having a long future with the Solana ecosystem. So that's why you start with depositing into both of these pools. Say you have $1,000, you put 500 of each, because you're going to be earning USDC, you'll be earning Solana, and then you'll be earning Meteora. However, you will be earning mostly Solana because the pool, okay, because when you invest in a liquidity pool, your payout is in the two assets that you're invested in. So in the first one, Solana and USDC, you're getting paid in Solana and USDC. And then in the second one, you're getting paid in Solana and Meteora. So add that together, you're earning mostly Solana, which is basically what you want in the entering into a bull market, especially because Solana is more verifiable than Meteor. I think it's gonna have even though me personally, I think it's still a great asset, but it's not as verifiable. It doesn't have as much history compared to Solana. So
Let me
that's
just
why,
add this, Quay.
yeah, go ahead.
Yeah, just kind of another way of saying what you're saying. Like Meteor is a new token and it's a DEX token. You know what I'm
Hmm.
saying? Versus Solana, it's been around. It's a L1 token, a gas token. You know what I mean? Different utility, been around a little longer. That's kind of what he's getting at here.
Hmm. Hmm. Yep, yep. So that's why, like, you would. that's why I wouldn't personally do a Meteora and USDC pool and then a Solana and Meteora pool, because in that situation I'll be earning mostly Meteora. I would rather earn mostly Solana because of the history it has. All right, so going into the strategy, you earn fees and rewards. Okay, you collect them, you earn them, and then, like I say, you're gonna get your USDC earnings, and you put that into a stablecoin liquidity pool. Now, how that works is I see stablecoin liquidity pools as basically like high yield savings accounts that pay you much more than your traditional high yield savings account, because essentially people make swaps in between USDC and like in between stable coins. For example, we can look on Radium. Currently, Meteora does not have stablecoin liquidity pools. I don't know why, but Radium does. So if you go um, right here, I would invest in the liquidity pool that also has rewards. So if you look at USDC and USDT, you're earning 3.59%, and that's in a 24-hour span um, on your income. And they're paying you weekly rewards as well. So you're basically earning 3 coins when you when you invest in this stablecoin liquidity pool. Even though two of the coins technically are stable, but you're earning a additional coin, the Ray coin, just from parking it in there. You know,
And let me
so
say this too, Quay, because
mhm,
the APR is a 24-hour APR it's showing you guys, right?
mhm,
So in another 24 hours, it might say 5%. In another 24 hours, it might say 2%. You get what
mhm,
I'm saying? Based on the volume within that 24 hours. So my point in saying that is sometimes when you see that quote, you say, "Oh, that's not a lot." But it's giving it to you based on today's or that last 24 hours. So
yep,
if you look at it more on a, a 30-day or 365 scale, it might come out more to 15 to 12%.
yep.
Yeah, so I just kind of want to throw that out there because sometimes that initial APR that you're seeing could be a little lower or it could be a little higher than what you're actually gonna get. On the stablecoin one, I would say it's definitely lower.
Yeah. Yeah, and especially if we know that we're entering into a bull market, like these volume levels are going to only increase. So meaning that our APRs will be increasing as well. So definitely want something to
And
keep in
guess where
mind.
everybody goes in the bull market? They take profit and go into their stablecoins.
Exactly. Yep.
More
Yep.
fees, and you
More
already in the pool.
fees. More fees. They coming straight to you. They are coming to you. All right. So all right, so with the USDC earnings, you're going to take, because like I said, you're in two pools, but the one pool that's doing Solana and USDC, you're gonna take your USDC and you're going to instead of just spending it or putting it in your wallet and just letting it sit there, you're going to put that into a stablecoin liquidity pool. And if you also want, I would encourage you to uh, put half of those earnings as well. So half into the stablecoin liquidity pool, and then the other half into a gold and USDC liquidity pool. Now, why that's important is because if you go to Meteora, they have a gold liquidity pool um, right here. Okay. Now, as we've been talking about, gold is, well, normally gold is a very like not super volatile, very steady growing. I mean, over the past few months it's been moving like a dang crypto, but overall it's very stable, constantly growing, and it's you're not going to see crazy large drawbacks. And it's basically another way to protect your capital, but to still slightly get an appreciation, you know? So that's why I would suggest, because when it comes to uh, the stablecoin liquidity pools, your investment isn't really growing at all. You're just earning extra fees. But when you have it into a gold paired with USDC liquidity pool, you actually are earning those gold tokens, those tokenized gold as well, along with the stable. So it's like your investment is slightly growing also. Now, also to keep in mind, as gold goes up, your pool will shift more into the stable coin, because how the liquidity pool works is when you're basically the coin that's or the asset that's performing the highest, you will get less of. That's how it kind of shifts the balance. But when gold is going down, you're going to earn more gold tokens. So it's kind of a way to like dollar cost average into more gold when when gold is going down, but when gold is going up, it's kind of a way to take profits in the average way as well. So just keep that in mind also. So this is just, like I said, a way to protect your capital in the in while you're earning these fees instead of just spending them. All right, now that's the next step. That's the first step. Now from your Solana and Meteor earnings, what you would do is you go to this platform called Jupiter AG, and you go to borrow. All right. Now going back to the flywheel. This is the centerpiece of your flywheel, because right now all you're doing is you're earning tokens, you're earning fees, and that's great. You know what I'm saying? However, if you want to basically stack your coins, your tokens up, and then use the power of your assets to borrow against it, and use that to reinvest or do whatever you want to do, you would come over to Jupiter Lend, and you would go to Jupiter LP or any of these. You can deposit into Solana, Jupiter Soul, any of these. I would recommend Jupiter LP because it has the highest APY rate. See, it's at 11.3% right now, and it has a very high liquidation threshold, 90%, meaning that you could basically borrow up to 90% of your money until it gets liquidated. But if you look at like Solana, it's 85%. Jupiter Soul is at 95% as well. The
Yep.
thing about Jupiter LP that makes it interesting is that it's an
30% of it
index
is
fund.
stables, I think.
Say it one more time.
Oh, 33 or something like that is the ratio they keep at stables as well. That's also another reason why the lit threshold is higher, because like a
Okay.
certain like 33% of your JLP is in stables at all time. So
Mm.
you also have less volatility.
Yep. You have less volatility, and the Jupiter token is a representation of four assets. It's, well, like I said, 30% stables, but also it's a combination of the price of Solana, Bitcoin, or wrapped Bitcoin and wrapped Ethereum. So essentially, what that means is that when Bitcoin has a super large drop, like, well, I'll show that another time. When Bitcoin has a super large drop, Jupiter LP, since it's a combination of multiple coins, it's not going to drop as much. So it's kind of a way to protect your capital. And but also the same happens when Bitcoin or Solana or Ethereum is pumping super high. It's not going to, like, so Solana goes up 50% in a year. Jupiter LP might only go up 20%, 25%. So, it works in both ways. But I really like JLP and what it's doing, and the APY is nice. The APY is nice. This is gonna automatically go into your balance. Like, you don't have to claim anything. It's just gonna automatically go back into your to your account, which allows you to borrow more. You know what I'm saying? Of course, that's based on the price of JLP, but essentially you're earning more. So essentially, you're based on this strategy right now, you're earning from your liquidity pools, and you're earning from just parking your money into this JLP um, borrowing account. All right, so you're
This is what we
earning.
call yield on yield.
Yep.
Your yield earns you yield only in DeFi.
Yep, your years on years. So now, when it comes to your Solana and your Meteora earnings, you have to swap those into the JLP token. Now, when you swap those into the JLP token, then, like I say, you deposit it into the JLP account. Now, this is like that. This is like the engine or the of your flywheel, because now you're going to borrow against your account. Max, you want to keep your level at 50%. You don't want to borrow out more than 50%, because you don't want to potentially get your account liquidated, because JLP can go down, which can make your account, closer to the liquidation rate if the price of JLP goes down. But same up go if it goes up. If JLP goes up, then your health rate goes down. You want to have the lowest health rate possible, because if you have the lowest health rate, that means you can borrow more. You know, so like Zarena was saying, your yield is earning you yield. So you're gonna take those earnings, swap them into JLP. You're gonna earn more yields, and then you're going to borrow against that, and then reinvest that money that you borrowed against right back into your Solana Meteora liquidity pool. Okay? Because if you get more fees, you get access to more JLP, which is going to give you access to more borrowing. All right? And the end goal is basically, I don't know why I put in this text like this. It looks super hard to read. But the end goal is to maximize your Solana and your Meteor exposure for the bull run. That is the end goal. All right? To maximize it. So, yeah. So you're going to use basically the JLP to help you maximize that. You're going to borrow out against, so that all your fees are because what you could do is you could just take your fees that you earn and reinvest that back into the pool, which is fine. But why not take your fees, put them in another spot, which is Jupiter, earn yield on that, and then still have the ability to borrow against that and then reinvest that back in. It might not be 100%. You're only able to, like, for example, if you made $100 in fees and then you deposit that $100 into JLP, you're only able to borrow out $50, and then you can only, it's only 50% you're putting back into the LP, but you're still earning 11% APY on that initial $100 that you put in the account. So it's not like you're really losing out on anything. You know what I'm saying? You're still earning regardless, and your capital is growing somewhere else. So that's basically the strategy for the bull run. Now, when it comes to entering into a bear market, you're going to have a little bit of a different strategy. So you're going to continue earning your fee. You're not going to like exit your liquidity pools. You're going to keep them how they are, but instead of taking 50%, like from your Solana and your Meteora earnings, you're going to do the same thing, swap them to JLP, deposit into Jupiter. But instead of borrowing up 50%, you're going to turn that level down more to 40%, more 40, maybe even 30 if you want. You know what I'm saying? Because you don't want to be borrowing out too much, because if you're borrowing out too much and the JLP coin goes down, that could get you closer to the liquidation rate. So you don't want to be doing that. And then instead of dropping all your coins straight into the Solana Meteora pool, you're going to instead drop your coins, not your coins. Basically, after you take that borrow out from your Jupiter account, you're going to, instead of reinvesting it back into your Solana Meteora pool, you're going to put that money that you borrowed out into your gold and your stablecoin pool. Okay? Because why reinvest the money you borrowed out when you're pretty sure that, the value of this asset is going to go down? Just keep the liquidity pool that you already had, just keep it cooking. But it might not be the best idea to take a borrow out and you're basically putting it into a depreciating asset. And that might not be the wisest idea. you know. So instead of putting your borrow money into a depreciating asset, you're putting it into a more stable asset, which is the stable coin pool and then the gold liquidity pool. You know, do a 50-50 split with that. So basically what you're doing is you're minimalizing your exposure to the Solana and the Meteora pool. And then same with the USDC earnings from those two liquidity
You're
pools.
also another way to say that, Quay, is you're
Mm-hmm.
de-risking your exposure
Yeah.
to Solana and Meteor, being as though you already are in the pools. So you're
Mm-hmm.
de-risking your exposure by going stable and what was it, golden stable?
Yeah,
Stable,
gold and
stable. Yeah.
stable. Mm-hmm. Yeah. Yeah. Like if you know that the bear market is on the right on the way, you know, de-risking. That's definitely a preserving capital because dropping all your borrowed money into a asset that you know is depreciating like that, it's not a good way to protect it, you know. So yeah, so oh shit, hold on. So yeah, you basically the goal is to the end goal preserve capital and stack stable coin yields and what does that say and reduce volatility exposure, you know. So yeah, so that's pretty much the strategy, and you will be using these three platforms. Uh, Radium for the stablecoin pool. I would suggest the USDC USDT. I don't really trust the World Liberty USD1 stablecoin. You might see it having nice APYs, but just because that's Trump's family, I don't really want to support them. And it's not paying any fee any rewards. So I'm definitely don't care because it's not paying any rewards. You know, I want all the rewards possible. So this is the stablecoin pool I would recommend. Then on Meteora, you got the gold USDC pool. That is where these are the pools you use to preserve your capital. And then when it comes to growing your capital, you would go to the or basically elevating your exposure, you would go to the Solana USDC pool and then the Meteora or whatever basically you're doing like a, a crypto to crypto pool as well. It doesn't have to be Meteor. It could be Pump Coin. It could be Jupiter. It could be whatever coin you want that you think that you betting on. You know what I'm saying? It could be any of those. So the strategy is basically having one pool that's a stable. You're essentially having setting up four liquidity pools. Okay, like so it's really like real Legos going on, but you're essentially setting up four liquidity pools. Two of them are connected to Solana and USDC, and the other one is a Solana to any volatile coin you want, whether it's Meteor or let's Pump, whatever. And then the other two liquidity pools are the gold pool, the gold and USDC, and then the stable USDC pool. And basically, all your earnings from that, you're putting them directly into the Jupiter account, which then when you want to reinvest to grow those liquidity pools, you would just take a borrow out and then use that money to reinvest it because now all your earnings, your yield that you earn are now earning somewhere else because like I said, we got this 11.3% APY. And get this APY can definitely appreciate based off of the trading volume of the Jupiter platform. So this 11.3% doesn't stay the same. Like I remember at one point this number was at 7%. Now it's at 11.3%. It might be at 30% at some
Could
point,
you
you
hover
know.
back over that the 11% so we can see the breakdown?
Mhm.
So it's just from earning fees APY, right? Not supply. Okay,
Mhm.
so it's from the JLP position itself. Okay. That's what I was just trying to figure out myself. Okay.
Mhm. Yep. But that's automatically put into your account. Like you don't got to claim. You know, you just
Yeah,
sit
it's
back.
auto
Do
compounding. It's APY. So APY is auto compounding. APR means you gotta click claim.
Mm. Oh, okay. I didn't even know that. Okay, nice. So yeah. Okay. We got a question in here. So you keep your initial investment in the LP. You only take out what you earn in the LP and reinvest it. Exactly. Keep your initial investment in the LP. Don't take that out. But all the fees that you earn, you then deposit them into uh the JLP borrow account. You swap your earnings into the JLP token, which you simply go right here to swap USDC into JLP token, you know, um, and then you swap it, and then you go right over here to the lend and borrow, and then literally you just deposit it in there. Like it's super easy, like super simple. You just going in there. You do, and you can allow yourself to borrow out in USDC. You can borrow out in USDS, and it's kind of looking like borrowing out in USDS or USDC is a good move because this borrow APY is cheaper. The only reason why I would still do USDC is because my liquidity pools are already in USDC. So now this stops me from having to do another swap from, say, USDC into USDC because them swaps add up. I want to do as minimal swaps as possible. So I'm basically willing to take that extra 0.5% borrow APY because I want to do as minimal swaps as possible. And since my uh most of most of my pools use USDC already, might as well, borrow out in USDC so I don't have to swap from another
So
coin back, you know.
something else,
hmm
what you're saying is also very valid and that's important. I do want to point out that the J or Juke USD looks like
hmm
a lot of people are borrowing that for that reason. It's probably a lot of looping going on. So you may not even be able to borrow a lot of it,
Oh yeah, I
as you
don't even
can
think you can.
see from the
Yeah,
utilization over there.
it's maxed out.
Yeah,
It's maxed out.
because it's cheaper. They're
Yeah,
incentivizing you to use it with a cheaper
yep.
rate.
And
So
USDC is getting there too. It's getting there. Yeah. So y'all, hey, we get in this while you can. Tether. They trying to get Tether. They trying to let Tether do it. But I guess people not rocking with Tether like that. But yeah, USDC is getting there. So I think it says the top max is 20 million. It's only at barely a million. Um, so yeah, so like I said, you take your earned fees, swap them to JLP, deposit them into this account, and then borrow out USDC, and then use that to reinvest back into your liquidity pools. If you're entering into the bull market, you're gonna reinvest back into your Solana and Meteora liquidity pools, and then your Solana and USDC liquidity pools. But if you're entering into a bear market, you are not going to you are not going to reinvest into your Solana and Meteora pools. You're going to reinvest into your um, gold in USDC, and then your stablecoin liquidity pools because that's going to help preserve your capital throughout the bear market. You know. And also, I just wanted to show out this is just on the Solana network. You can use this same strategy as a DeFi flywheel when it comes to the Aave platform as well. So essentially, okay, so let's start with LFJ. This is the main liquidity pool platform for the Avalanche network. And they have USDC stablecoin pools as well. They also have a gold to US to stablecoin liquidity pool here. They have a AVAX USDC, and then they have a AVAX to Bitcoin. And all these pools earn rewards. That's why I like LFJ because they are paying you extra rewards. Because to be honest, on the Solana platform, their liquidity pools are not. Oh well, on the Meteor platform, their liquidity pools are not paying you extra rewards. You know what I'm saying? Only that rate that the only the all those other ones were not paying you extra rewards. So if you're a fan of extra rewards, you can do the same thing on LFJ, you know, and I would tap in with the AVAX BTC, AVAX USDC. Those would be my two volatile liquidity pools. And then the ones to preserve the capital would be the gold USDC, USDT, and then either one of these USDT to USDC or any of these, and they're all paying you in rewards. And then what you would use to borrow out against, you would basically take your fees that you earn and you can just deposit them into an Aave account, earning that 2.65% APY. Now, the difference is um, this APY is not as high as the Jupiter APY. Now that's kind of what makes the Solana Jupiter borrow a little attractive because their APY is much higher. But you can still come over here and drop some into this USDC coin. It's going to be stable, so you don't have to worry about your capital going up or down, which you kind of do have to worry about on the Jupiter platform. But you just collect that 2.65 APY, and this APY can appreciate as the market grows because these APY numbers don't stay the same. As the market is in more bullish conditions, the APY goes up, but so does the borrow rate also. So yeah, so you can do the same flywheel with Aave. Take your earned fees, deposit them in here, and then borrow out against it, and then to reinvest back into here. You know, and with this one, you only using two websites, which is this Aave and LFJ. But with the Solana platform, I was using three because the main advantage is that Meteora has the gold liquidity pool, whereas Radium does not have the gold liquidity pool. If Radium had the gold liquidity pool, I wouldn't really need Meteora, to be honest. But because Radium does not have that, I'm over here with Meteora. So that's pretty much that. Yeah, yeah.
Peace Quay. I want to add a couple things. So
Go for it.
one is the JLP that you were saying to yeah. So you're doing 11%, and it gets higher. Sometimes it's 40, 30, 50,
Mm-hmm.
right? The average is probably higher than 11. It's something like probably like 25% or
Yep.
higher. Um and you're saying, you guys can see right here live, any of those borrows are already cheaper than what your principal is doing in yield. So you got at least, if it's doing 11 and you paying 4, right? You got a good
Mm-hmm.
spread right there.
Mm-hmm.
That's 6%, right? Just on that. And then obviously you're adding this money from the LP. So you got yield from that. And Solana USDC, I can say from personal experience, I mean, I'm not getting in the pool unless it's doing 5 to 10% a month, just because of the volatility on Solana. The coin itself, right? Not on the network, but the coin itself, right? Within permanent loss. So, yeah, like 5% probably is, you know, a good little reasonable number to say you would net on a sold USDC LP. So again, even just on that, that's a month. So what's 5 times 12? 60. So you could say safely you do 60% on a year on that LP, not including appreciation, depending
Yep.
upon, you know, like if you're doing the JLP strategy, you are going to get some appreciation. It's going to be a little muted because of the USDC reserve position. And you can go to JLP and see the actual breakdown of like how much is in each coin or whatever.
Mm-hmm.
But yeah, the main thing is, so you're doing 60% on that. The JLP is doing 11. So you guys get what I'm saying? Like the spread here, if you really know how to manage this and yeah, do what you're doing, this could really work out for you.
Yeah, and that's actually better than Aave because Aave you're paying more to borrow out. So that's actually, yeah, like that makes more like that's definitely the advantage that Jupiter has over Aave because it costs more to borrow than to supply. You know, so that's interesting. I'm trying to see how I could see that
And
level.
the USDC USDT stable is going to do at least 12% probably on a year. So that is also beating your debt, right?
Yep. Yep.
That's another
Mm-hmm.
6% spread.
Mm-hmm.
And again, I didn't include, appreciation depending upon which strategy you go with. If you keep some of the soul, obviously the JLP gives you some exposure to Solana as well as Bitcoin. I believe Ethereum as well, not as much though. So the point is, like I was saying, it could work out if you manage it right and know what you're doing. So I like this flywheel.
Mm-hmm. Okay. Okay, so if y'all can see this, JLP stablecoin composition is approximately 35% based on underlying asset allocation. This means about 35% of JLP's value comes from stablecoins like USDC, while the remaining 65 is composed of crypto assets such as Solana, Ethereum, and wrap BTC. The stablecoin weighting contributes significantly to JLP's relative stability, as noted in multiple sources. For instance, data from September 2024 shows the actual stablecoin ratio is 58.8%, indicating that the pool's composition can fluctuate based on market activity and trading volume. However, the typical long-term stable share remains 35%, making JLP a hybrid asset that balances crypto exposure with stablecoin resilience. Now, that makes me wonder, is JLP kind of doing the same? Like, if we're entering into a bear market, is it going to put more assets into stablecoins to protect itself from from a large drawback or something like that? Because I'm like, what was Solana looking like
It may,
in
because it's about trading and it's also about the volatility. So it may have been because it was a lot of volatility. Um, if traders are winning or losing, that's where the yield comes from. On JLP, if you was wondering, when they lose, you make money.
mm-hmm. Oh
You're the
right.
house.
Mm.
Yeah, you're the house.
I'm looking at what was Solana at in
And I don't know what the stat
September.
is, but most traders lose money. That's what I do know. You can Google the stat.
Yeah. So what was Solana at in September 2024? Uh, Looking at it on the weekly, it was oh, it was at a, it was kind of at a top. Well, it wasn't at a top all the way. It was it was at around what, like 160, like one, like 163, but it shot up soon after, like in November. Interesting. Yeah. Well, I wonder how it determines like if it should be more in stable coins or not. Yeah. Okay. So yeah, did that all make sense to everybody when it comes to the flywheel and how that works? Because this is like real passive income streams. Like, it's more than just like, yeah, like this is a, like, if you really have like, if you can really master this concept, like this could be like, I'm not gonna say like a retirement, but this could like add to your retirement plan, like in 10 years. Like, this is just constantly paying you out, and like you're set. You know what I'm saying? Like, I'm not gonna say you're gonna retire off this in 1 year, but if you use a flywheel for 10 years, like you will definitely have a beautiful system going that could really support you. You know what I'm saying? And have you basically financially free. So, like, I think this is definitely something to do, like, and to practice with. You can start this flywheel with $100. You don't need thousands. You can start this with $100, and Like Solana network, the fees are very cheap. Even on the Avalanche network, fees are very cheap. So you're not going to be paying, even if you're doing $100, you're not going to be paying, you're going to be paying cents, less than cents sometimes for these transactions. So even if you got 100, it's okay. You can start with that, you know? So, hmm and if anyone needs additional help with these flywheels, you guys can reach out to us directly. If you have our Instagram, if you have our Discord, you could just send us a message and we could definitely, help you put together this flywheel. I know it might seem like a lot of moving parts, and it's really just two moving parts that are like gears that work interchangeably. But it's this is something for the long term. Like I think this in a week. But if you start now and you start doing this for a year, some man, you would be so thankful. You would be so appreciative. Like, I mean, this is the stuff that I feel like if I win in crypto and not trade, this is how you can really win. Like, and I find that to be so amazing because a lot of people beat themselves up if they're losing in trading and they're like, man, I'm not good at crypto because I don't know how to trade. But I'm like, yo, this you're still earning passive income and you're not trading. Like, can't beat that. You know what I'm saying? You really can't. So yeah, if y'all have any questions, put us in the chat. Um, yeah, if you had any other, Zoran, if you had any other topics or any other things you want to discuss, um, dropping off. I know we talked a little bit about some on ramping, some off ramping platforms. If you wanted to talk about that a little bit, or yeah, just let me know. Let me know.
Just
Okay, we got one question. So the more you put in the LP, the better. Like a monthly deposit. I would honestly drop that monthly deposit into the borrowed account because then you would you're basically earning money in two places. You're earning extra yield in the account that you're supplying for the borrow, and then you can take a borrow out from that account and reinvest that back into the liquidity pool. So, me personally, I wouldn't drop that monthly deposit into the liquidity pool. I would drop it into the borrowed account and then borrow against that, keep my health ratio at 50%, and then put that into the liquidity pool. Because if you just drop the monthly deposit straight into the liquidity pool, you're skipping the borrowed account, and that's like the main thing that makes the flywheel. So let me know if that makes sense. But essentially, overall, I mean, the more you put in the LP, the better. But I wouldn't just drop it straight into the LP.
yeah, if you doing deposits, it might be better to do JLP and get a mixed exposure and get just whatever the yield is gonna be. It does vary. Um, yeah, and rock it from there, and kind of use that as your principal, and then start out the LPs from a debt position, you know, which is already a little bit more of a de-risk in a way. But yeah, when it comes to the on and the off ramps, yeah, just like I was saying, 1099 DAs are going out. Just be mindful of that. Be buying or selling and stuff like that. And just know what it actually means. I'm not a tax person or anything like that. I just read. And what they saying it is and what it is, sometimes it'd be two different things. But yeah, you doing that stuff on Coinbase and whatnot, you probably gonna get some stuff. So it's better to know how not to get that, or really just like go in stables, go out stables, and all they gonna like what's gonna be on there, you know, or do your own thing on the side, privately, where you only have one counterparty, and it's not Coinbase. So keep that in mind.
Now, how do you feel about neobanks, and what makes a neobank a neobank? I don't know how you feel about that. And like, is that a way to on
Um,
ramp and off ramp?
yeah, Electrify, um, Spritz, Paylink. If you like into doing like the way their tech is kind of cool. You can basically in humanity protocol thing it's called, to basically
You're breaking up a little bit on the mic.
you
That's thing you know.
you have like a proof of identity on chain in a way, or like actually, um,
Can't hear anything.
like, so yeah, it's a lot of different.
And you're saying Spritz Finance is essentially a neobank? I didn't know that. And yeah, like why this is important is because, when it comes to these passive income streams we're learning, we want to learn how to on off ramp our coins back into the physical world without basically these companies being all up in our business. You know what I'm saying? So there are definitely workarounds. Yes, yes. What platforms are better than Coinbase? I know that we have talked about Spritz Finance. That is one. Let me look that one up. Yeah. So yeah, this is definitely a good one. 50% discount fees for first 1,000 transactions. That's solid. That's good for sure. Um, yeah. From what I know, it's just basically just connect your bank account, buy crypto, or and you can sell your crypto back into your bank account as well. You know. Now it does have KYC. That is know your customer. Now that is definitely the thing about Spritz Finance. It does have KYC. Um, However, it doesn't seem like they put you through a whole bunch of hoops and jumps. Like you don't have to do it like Coinbase be making you do a lot sometimes. Um, oh, Sorry about that, y'all. My bad. My bad. Yes, Spritz Finance. Spritz Finance. So this is Spritz Finance right here. 50% discount on your fees. Yeah, and I think the fees only they're pretty cheap for the most part. It says 1% fee. So if they're doing 50% off, that's 0.5% to do a buy or a withdraw, you know? Yeah. They even letting you pay your bills with it. Use crypto to pay the bills. No bank needed, you know? So yeah, this is definitely a solid one. Now there is KYC. That's definitely something to keep in mind. So they are going. This company is going to know your name. They might ask for your driver's license or your social security, or something. However, another one that I recently heard about is called I think it's called ZK PT peer to peer XYZ. I believe that's what it's called. Dang. Uh, let's see. Okay, ZK peer to peer. Now I do want to get into this project. I have not done it personally yet, but essentially, you're able to buy crypto directly from peers, and you can use like Venmo and Cash App and Zelle and whatnot. Now, I'm wondering though, even though you might not have KYC, in a way, the platform does know who you are because you're using your Venmo, which is connected to your account. You know what I'm saying? So there might be a slight KYC, but it's not like I don't think you need to like you can for me for what it seems like you can just use your email and log in. Like I don't think you need to
So the way it
supply.
works, Corey,
Yeah. Mhm.
basically is it's just using your already existing IC, and it is completely peer to peer. And
Yeah.
your only kind of risk is like front end risk, really, I guess, like the fact that you're connecting, like if they're taking any data on what you're doing, like in the back end, just from the front end, right? But they still don't know who you're matching with. So your only counterparty in the transaction is whoever you're sending to Venmo or Zelle or Cash App or whatever method you choose. So it uses your already existing KYC from your bank, your Venmo, your Cash App, or whatever type of, like in euros, I think it's like Revolt or something, whatever they use over there. So it uses that already existing KYC. You don't have to do anything again. You just connect and boom.
Yeah. And this is definitely looks very simple for like sending money. Um Now I wonder if this does it work the same way when it comes to sending funds to your Cash App or to your um Zelle or to your, you know what I'm saying? Do you know if it works the same way with that?
What do you mean going, like if you wanted to get fiat, you mean?
Yes, yes.
Yeah, it works the exact same way.
Okay.
And again, your only risk is the counterparty that you trade with. So peer to peer is where I'm familiar with as far as on and off ramps. And this is very much better than you know, what has existed previously. And this tech is actually, it's so like, shout out to these guys for building it, because it's like it's exactly what I had in my head. Because I'm like, they can already use what already exists. There's ZK. Like what? Like before we didn't have that. So yeah, there was that's why local Monero shut down and stuff like that. And that's why local Bitcoins went KYC, and because of that. But now we have this element which we didn't have previously, this tech rather, which is zero knowledge proofs. That's what ZK stands for, and it literally it is what it says. They have zero knowledge of what's going on. It's all between you and the next person.
Mm.
Um, but yeah, as far as for an on and off ramp, yeah, it's very private. And I actually just watched a YouTube of the of I don't know if he built it or if he worked for the company. I can't remember. But today about this. And yeah, he was like, if you he literally said this, he was like, if you wanted to like just start up like a fresh wallet, this would like be the best way. Because nobody would know except the other peer. So that's coming from them.
Now I heard about this one wallet. I believe it's called Avicii, and it's on the Solana blockchain. Trying to find it. Uh, Avicii Money. Have you heard of this? Like, I think this is a neobank, and
Yeah, I've heard of it in passing, but I've never actually used it or looked it up.
because I'm just what I want to get my understanding of is what makes a neobank different than a peer to peer, or like, and are you saying that Spritz Finance is essentially a neobank? Like, what makes
Um,
a
I
neobank a
don't
neobank?
if they have the card, I would say yes, Spritz is kind of a neobank in that way. Um,
I
what
said
makes
they're
it
working on the
different?
card. That it's you can run away.
Okay, they're still waiting on it. Yeah, that's what I'm saying. They had the
Yeah.
head start, but they're low key lagging behind in these others. That's why I mentioned the other ones because I'm not saying they're not good. I do like the bill pay and other things, but you know, there's other stuff now.
Mm-hmm. Okay. Yeah, because I'm like, this on ramp, that's like the next step to the flywheel, being able to easily on and off ramp that, like, with the least amount of KYC possible, you know?
Yeah,
Like, once,
ZK is that then. If that's what you're looking for, is ZK peer to peer or just another, you know, like if you have another peer to peer system. You know what I'm saying?
hmm
But this, as far as digitally, yeah, some of the best
yeah,
stuff out. Again, from just from the
okay,
part
right,
of how they're doing it.
okay,
Um, so as far as neobank, I think Spritz isn't a neobank. I would say EtherFi is more of a neobank, or it is really a neobank.
okay. Oh yeah, ZK. They got even JLP. You can buy JLP, so that in that way you don't even have to, like, for example of your monthly deposit, you can just buy straight JLP and deposit that into your uh, borrowed account. That's pretty dope. But but the thing that makes, oh yeah, because essentially you can send it back to your Venmo and you can spend with that and everything. Um, Now the only thing I am thinking about is, like, if you want a card that is not connected to a centralized company, because I know, like, if you're maybe say if you're doing making a purchase that you don't really want, like, it's a large amount and you might not want it, directly on that platform. Like that's kind of the advantage I see with some of these neo banks or some of these non KYC cards. Like you could basically purchase like or just, if you don't want the company knowing like what you're buying, you know what I'm saying?
Yeah,
Um,
no KYC
or I mean,
cards are definitely fire.
yeah,
Just a little bit of a different application.
and they're normally a little more expensive to use. That's the other aspect. Um, so it's like, yeah, I'm wondering how this because yeah, like I don't because they even like to be real like some of the like Venmo they might report like if you're doing a bunch of volume on your in your flywheel and then you're depositing that into your Venmo and all that stuff like they might report you and then like you'll get some stuff from your from their company like tax stuff